Most crypto traders make one fundamental mistake. They are stuck in a single market. So the real problem is not just volatility, it is limitation. Because today, markets are connected. And when the Fed speaks, when rates change, and when earnings come out, crypto and stocks often move together. But most traders are only positioned in one of those worlds. And exactly that creates friction. You need multiple platforms, multiple accounts, and you are constantly switching between them. You deal with delays, different systems, and sometimes you just cannot act at all. And that is exactly the gap BitGet is trying to solve with what they call their universal exchange model. The idea is simple but powerful. One account where you can trade across crypto, tokenized stocks, and other assets without jumping between platforms. And one of the key pieces of that is something called Stock Perpetuals. So, what are Stock Perps? You are not buying real shares. You are trading perpetual contracts that track the price of major companies like NVIDIA, Tesla, Apple, Google, Meta, and many more. But here is what makes it different. You can trade them 24 hours a day, 7 days a week. You use USDT directly, and you can go long or short at any time, all inside the same BitGet account. So instead of needing a broker for stocks and an exchange for crypto, everything sits in one place. And that changes how you operate as a trader. So let me make this practical. First, hedging. Now, let's say Bitcoin starts dropping hard, and in many cases, tech stocks will follow. That correlation is not perfect, but it is strong enough to matter. And instead of just sitting there watching your crypto positions lose value, you can open a short position on something like NVIDIA or Tesla. You're not betting against the company long term, you're simply managing short-term risk. Now, obviously, it's not a perfect hedge, but it gives you a tool that you did not have before. Now, a second example, macro opportunities. Imagine the Fed signals a shift in policy. Maybe rate cuts are coming, liquidity expectations change, and markets start reacting. Normally, you would have to wait for traditional markets to open or move funds between platforms. Here, you do not. You see the signal and you go long on tech immediately. Same account, same system, and no delays. Or for example, during earnings seasons. When companies move fast and volatility spikes, you can trade those moves directly without worrying about market hours. And that is a real advantage. Now, third, diversification. Most crypto portfolios are not actually diversified. Instead, they are highly correlated. And when crypto goes down, everything goes down together. Now, with Stock Perps, however, you can add exposure to different sectors without leaving your trading environment. No new broker, no fiat transfers, and no extra friction. Everything stays within one system. And this is where BitGet pushes it further. Because it's not just stocks. Now, let's talk about execution and costs, because this matters more than most people actually think. Right now, BitGet is offering zero maker fees and taker fees as low as 0.0065% on these products, which is significantly lower than what you typically see with traditional brokers, especially if you're trading actively. Lower fees do not make you more profitable, but they reduce friction and allow you to execute more efficiently. You also have features like cross margin, which means your capital can be used more efficiently across positions instead of being locked into isolated trades. And because everything is in one account, you avoid delays from moving funds or converting between fiat and crypto. Now, before this sounds too good, let's do a reality check. First, leverage. Yes, you can use high leverage up to 100x, but leverage is not an advantage if you do not have a clear strategy. It just increases your risk and speeds up losses. Second, correlations are not always guaranteed. Crypto and tech often move together, but not always. If you rely blindly on that relationship, your hedge can fail. And third, this is not long-term investing. You're not owning any shares, you are trading price exposure. This is positioning, often shorter term and more tactical. And fourth, execution still matters. Low fees and 24-hour access do not fix bad decisions. If your entries are poor or your risk management is weak, you will still lose. So how do you actually use this in a smart way? Keep it simple. One approach is defensive. If you are long crypto and risk starts increasing, you can short correlated stocks to reduce exposure. Another approach is offensive. If you have a strong thesis like continuous growth in AI, you can go long NVIDIA. And if you think certain stocks are overextended, you can short them instead. And the third is macro positioning. If rates are rising, you might go short on growth stocks. If liquidity is returning, you might go long on risk assets. The key is that you are no longer limited to one market. And this is really the core idea behind what BitGet is building with its universal exchange. On one platform, multiple asset classes, and the ability to react to global events without switching systems. Because in the end, most traders do not lose because they are always wrong. They lose because they are limited in what they can actually do. And more markets give you more options. And if you can use those options correctly, you can make better decisions as well. Thanks for watching. Check out BitGet in the description, subscribe, and see you at the next one.